What's up, everybody? Blue Toshi and Disco here, and this is your weekly Decentral Lens news.
This is Decentral Lens, distilling the crypto news you need to know and why.
All right, Disco, how you doing this week, dude?
I'm feeling good. I'm there's little feels of fall happening, which are quite quite exciting to me. There's again, it's always just mind blowing the amount of things that pop and the amount of things to keep an eye on. And I'm excited to kind of, just work through some of the stuff going on, some of the stuff coming up later today, and just have another good conversation. I'm feeling ready to roll, I guess would be a way to say it.
That's a good way to put it. For anyone who's wondering, I have a new scar on my forehead, as my daughter calls it, the Harry Potter scar. I was at a wedding in Jackson Hole, Wyoming this weekend. It was quite fun, and as you're prone to do after a wedding, sometimes in the middle of the night in a foreign place, you have to use the facility, and I did, and there was a separate door for the bathroom, and as I turned around to leave, I literally scraped my head and ran it straight into the side of the door and got this awesome scar. And I was like, oh, I don't think I'm bleeding, and then I put a washcloth on it, and it was literally a bunch of like 2-inch lines everywhere. I'm like, oh, that's blood, but apparently it didn't go anywhere. So I have a new Harry Potter scar, and I'm kind of proud of it. I like it.
It gives you a little toughness. A little, you gotta have some bumps in the road and on the old canvas. You're living life.
Exactly. It also looks like I've got crazy eyebrows. It looks like an eyebrow could be out of place too. So it just really depends on what you're going for.
Everything's your perspective, my friend.
Yeah, exactly. But there's a lot of fun stuff to talk about this week. The first being decision day. Like, we've been talking about it for a little while now, and everybody's been anticipating the Fed. Are they going to go 0.25 or 0.5? Before I give a take, what do you think, Disco?
I think they're going to do what Larry Fink wants them to do, which is probably to go 0.25 and not make it too disruptive. I've often thought really now about like what the meetings really are, and is it really like, wait, did we get the email on what we're supposed to do yet, or how does this kind of policy come out? Because you kind of see it leak. I know earlier this week people were more bullish on a 0.5, but it seems on Polymarket as well, it's come down to now it's 57% for a 25. So I think that's where it's headed. I guess the good news is that at least it's going to start happening, and it represents kind of a next stage of what could be a cycle. And we're all sitting there kind of like, when the hell are we going to, decouple, and when are we going to, see crypto and Bitcoin as asset classes, not be dependent on, kind of the stock market and that macro-y stuff tied in there. And I think that hopefully this can start, some positivity in terms of the markets moving forward for us, because you see these, stock markets at all-time highs and stuff, and you're like, dude, we should be, lapping that. We should be so far freaking ahead of, traditional, S&P 500s and stuff. So long-winded answer, but I'm a little pumped up to just kind of turn the page and move into a new era.
Yeah, I think to TLDR on the Fed interest rate today, the answer is who gives a shit? Like,
thank you.
Why are we still so dependent on what the Fed is doing with their interest rate cuts? Obviously, for Wall Street, who doesn't treat Bitcoin like the ultimate base zero store of money, it's all super far out risk on assets for them. And we've been saying this for months now, like, we Bitcoiners and crypto enthusiasts see Bitcoin as a store of wealth and long-term value, a store of the work that you put out in the world and the money you make and the energy you put into the world, you get it back, and it's actually gains value over time, as opposed to the US dollar, where you're saving money on your hard work, and it just there's a hole in the boat. So 50 or 25, it doesn't matter. And you're totally right. You nailed it, because 50 was totally the number. And there's all these like mainstream media trial balloons that they do. And at the end of the day, like, I guarantee it was going to be 50. And Larry's like, don't be a wimp. Like, slow down. 25 is fine. Like, the economy is not broken yet. So yeah, like you said, probably Larry, like, Larry, are we cool with this? Oh, thanks, Larry. You know, sorry to bother you, sir.
Sir, it reminds me of the ETF announcements, right? Like, we kind of had that figured out. And again, it's probably the same bat line to whoever's, the mouthpiece for it. But there's got to be a bat phone of some sort that's kind of laying out what's going to happen. And ironically, or maybe not ironically, today we came across a position piece from BlackRock to their investors about Bitcoin. And it's really interesting to see, how they're positioning these things and how it's put together. And, you realize that what this kind of represents is, an onboarding or an on-ramp route for, their extremely wealthy, clients. And, we start looking at, we've done these adoption stories for months about, sovereign nations, pension funds and everything. But this is a move towards, wealthy investors to allocate a percentage of their position towards Bitcoin as kind of a hedge and a diversification tool. So that's basically the point of, that deck, which is about 9 slides. And it's just kind of fun as kind of a nerd who's into this space to see it be, kind of the stuff we've been talking about regurgitated and kind of, polished up for these investor decks. But the net of it really is, there's a lot of it where it's like, dude, one of the problems that we have right now is that, traditional finance and folks are looking to put Bitcoin directly into like a pre-existing bucket that they can understand. So some of the points that they make in here is like, hey, don't just consider it a traditional risk on, risk off asset. And I think that's kind of the big theme for me is just like, let's just decouple and let's treat this for the unique opportunity it is, and stop trying to like have Jim Cramer put it in a number go up or bull or, it's over and all these stupid sort of statements.
Peter Schiff. Like I lost when I was young and didn't really have much money at all. I was in sales in my 20s and didn't have much money to my name. And I put it through the advice of a friend to put it in Peter Schiff's Euro Pacific Capital. And, this is when the dot-com bubble burst, but I was not in dot-com stocks. I was in like oil in Canada and in Australia because they wanted to put money into resources in countries that had a balanced budget. It totally made sense. But when the market tanked in 2001, everybody had to grab from where they were liquid to get out of that stuff. But when I tried to get out of my stuff with Peter Schiff's company, they tried to kind of extort me and charge me thousands of dollars to get out of the trades. And I complained, and then they lowered it to something more reasonable. And I was just like, never again will I mean, that guy's such a grifter. But anyway, that's more of a personal gripe because a much younger Blue Toshi got totally burned by that guy. And he's always like, the best comment I've ever heard is like, dude, if 10 years ago, the day you started ripping on Bitcoin, if you just put like 10 grand in, you'd be like a billionaire. Like, you're such an idiot, and maybe he already is a billionaire, but the guy's just a jackass. He's a total jackass. Anyone who listens to him, just know that guy is a complete grifter and stay away from him. Like, I'm a big fan of gold, but I'm not a fan of his gold only philosophy because I think he's an archaic dinosaur. But with BlackRock, this is super interesting. Like, everything we've been saying, they're educating the future ETF holders, at least, of what it is. And this point number 2, and thanks for digging this up this morning, but point number 2 is basically saying the risk assets, the thing that you're considering Wall Street complete risk on, is not the way to look at this. You cannot put this in a traditional framework. You have to look at Bitcoin as a completely different, uncorrelated asset. Because right now, we've seen the correlation between the stock market going up and down and Bitcoin going up and down because of the mental model these traders have and the big whale money has, and the big institutional money is like, oh, get rid of the super risk on stuff first at the first sign of a contraction. And this is saying you need to make this more like gold and a long-term store of value. So again, this is shit all of us here already know, but now the mainstream and the normies out there who, did not bring this up to you at last Thanksgiving dinner table, which we all thought they would when we were ripping. This is how they're going to learn this, starting with the institutional investors down to the money managers and the financial guys who tell the normies where to invest.
Yeah, I think that it's, it's not a victory lap, but it's another sort of kind of vindication, that, the theories and the concepts and how we, as at the bus stop, we've been dying to tell people, hey, check this out. Really, it doesn't fit into the, your traditional S&P asset class or whatever it is. But there was a piece further down in that presentation where they show, kind of the effects of geopolitical events over, since like 2020, and it shows how, maybe initially you might see a little dip over the 10-day thing, 10 days tied to an event, but if you zoom out and just give it 60 days, like Bitcoin recovers better than anything else. So I guess our message, I don't want to be a big Fed speak show or anything, but we're going to see the result of, or we're going to see the announcement in the next 40 minutes or so. Then we'll see the market do what it's going to do. And, at the end of the day, if you look at this, at the far right, you're going to see Bitcoin stabilize and ultimately go up. So wherever there are these big sort of events, and you can also put the election in that category as well. We have these big kind of macro events that kind of keep us feeling like it's sitting on the sidelines. But the net is when we, kind of look at the big charts and look at it from the different horizon, we always see it bounce back and be extremely resilient. So I don't want to be the biggest bull of all time, but I'm pretty freaking bullish on this as well.
Yeah. And what this BlackRock study is telling us is, so basically for those who are listening who can't see, we've got the US-Iran escalation in 2020, the COVID outbreak, and they show 10-day returns and 60-day returns for the Standard & Poor 500, for gold, and for Bitcoin. And what we see over and over and over is Bitcoin might be the first to go down faster after 10 days, which is super short term. Even by 60 days, which for me, I'm not a quick flipper and in and out investor. 60 days is still nothing. Bitcoin crushes gold and the Standard and Poor, the S&P 500 on all metrics. So basically, to me, it shows that people are grossly overreacting because it's seen as the highest risk asset. But at the end of the day, when calmer minds prevail, that Bitcoin is going to rip even more. And like I said, my theory on all of this, it's quite ironic. Like, you always think you have to front run people to win in something, but when at some point the other shoe is going to drop. Like, the US is 35, and now there's a chart that Disco showed us, I think we're about to pull up, that shows we're like 45 trillion in debt, the US economy. At some point that other shoe has to drop. And when it does, like, people panic, Bitcoin is going to go down first. And then it's probably at some point, once all the fear and FOMO get out, once all the liquidations happen, at some point it's got to rip. So it's like, not only, it's kind of the weirdest, you win on both sides. You can literally wait for these Wall Street whales to panic dump. And that's our signal to be like, I think I'll buy more. Thank you very much. Like, it drives me nuts because they're looking at it wrong. But I'm also like, wait, I don't even have to guess when a local bottom will be. So in that, and number 2 there, Disco, is the COVID outbreak. So I've bragged about this before because I'm no expert trader, but there was a day, literally maybe 2 hours, where Bitcoin was under 5,000 right when COVID got announced and everybody panicked. I don't know what it was at before, maybe 8, 9, 10, 11, 12,000. It was way higher, went down to like 4,800, and I grabbed a couple Bitcoin. And I was like, what am I not seeing? Like, either the world's going to end and I'll have the Bitcoin and I'll be dead, or I'll have the Bitcoin and everyone's overreacting. And obviously everyone was overreacting. And, I got in in real time because of their panic and their selling.
Yeah. So in a way, you're right. Like, we still have an opportunity not necessarily to front run, but to be strategic and to understand that there may be opportunities, to get back in. However, I kind of believe that once this gets more and more understood and this is disseminated and people process it, that it's gonna hit a fundamental baseline that I don't think it'll go much lower than, even regardless of the different events. And eventually you would probably
it will happen again. I'll bet you that will go down way more than everything else when the next depression, recession, or whatever happens. Like eventually people will learn and run like they run to gold, but I think it's going to take like a decade. I don't see it right away. You could be totally right. I think this game, we can play it over and over because that initial FOMO reaction is going to be like, ooh, get rid of this. They don't understand Bitcoin like everybody who's listening here. That's totally my opinion. Well, but I don't know, dude.
I find it interesting. And then, it kind of reminds me of something that Eric brought up on the show when he was like, the real test is going to be the next kind of significant event that happens. So I don't want to be like, hey, we're waiting for the next, shoe to drop or whatever it is, but it will be telling to kind of see how something like that really goes. Because right now, what I'm kind of talking about are like the macro-y things, and the election and stuff like that. But you're kind of talking more about the next kind of economic crisis. And I think that's what he was alluding to as well, which is when we see, something along those lines, like an '08 come about, how is that going to, shake things out? And will this kind of strategy be in play and be out there enough that actually, it would withstand it and become that kind of haven, if you will.
Yeah, that's a good point. So you're saying with like an election or not 2008-9 like depressions, but just like the this will be interesting. Yeah, like so when the election happens, if Kamala wins, I would assume like if she won and it was announced, Bitcoin would go down. It wouldn't be like 2008 depression style route, but I think it will definitely go down because they see the Democrats, is very antagonistic towards this industry. If Trump wins, I think it'll go up. I don't think it would, I could see it ripping if Trump won. Like, I don't know where it will be, but before the election, but I could see it ripping 30 or 40%.
So in a weird way, if you were really just looking for lower entry points, then, if she won, it could be another opportunity to pick up at a lower point, because I don't think either way, I don't think that's going to necessarily drive it forever. I think that what we see from this report and how they do it is the fundamentals are there. Everything we've been yapping about to each other, in our own little small tent for the past X amount of years, like we understand that that's sound. So in the end, stack them and hold them and be excited about any opportunity to acquire more at a lower price.
Who is that guy? There was a billionaire who just stated, I don't know if it was in our notes, but he just stated if Kamala wins, he is going to pull a bunch of money out. And like, he's basically like, I'm not participating in this economy if Kamala wins, because they're just going to keep printing money. I don't know if you saw it, but so so people are speaking up. So it's just really a side point to reinforce all of this. There was a couple other pages on this that you showed me that were really interesting. This one is just Bitcoin's long-term performance, and it just goes to show you, like, when Bitcoin goes up, like the first big run in 2010 to 2011 was 592x, so 500, almost 600 times growth. The next big cycle in 2013 was 555. The next cycle in 2017 was 104x. And then this last one in 2021 was only a 21x. And, who's to see? And so, I mean, this graph is logarithmic because you can't even fit it on there if you actually showed 600x, right? So it's the y-axis is a logarithmic scale. But it just goes to show you, like, long-term performance when you have a fixed supply is going to be up only. But I think the one that you really like, Disco, was the U.S. debt dynamics focus. So you want to share a little bit about this one?
Well, I just think that it's, again, I go kind of on the wider lens of just being excited to see that they are positioning Bitcoin as a counter strategy to this data, which is a reality, and seeing that just, in their presentation and in, like that's signed off on as an accepted, uh, concept or construct. And that's what gets me so excited looking at this. It's interesting. What we're looking at is kind of a chart that shows the accelerating US debt growth. And it's like showing the debt and then also showing the deficit. And you see that it's always kind of been hanging around the same sort of mark. And, you go into the printing of money and you go into, the production of goods and everything like that. And it just shows that they've consistently been printing, I guess, is kind of my takeaway net, right?
Yeah, absolutely. And, for again, those who can't see the federal debt, we're at about 35 trillion now, but this projects out to 2030 and they're projecting about 45 trillion in debt. That almost feels low to me in the next 6 years. But so the debt went from in the 1940s to teeny tiny in the, in the maybe hundreds of millions to 35 trillion now. The other graph on here is basically the US deficit versus or divided by the surplus percentage GDP. At World War II, obviously that deficit to GDP was way, way, way under. It was negative 30%, meaning you're spending way more money than your entire gross domestic product. Then after World War II, when all the troops came home and started the companies, the big corporations and things spiked, it spiked up to about, gosh, what is that? Probably like 5-6% over, which is teeny in comparison to how low it was. Then pretty much for our whole history, 1950s, 60s, and 70s, our deficit has always been below GDP, except for a little run at 2000, which was that .com. We now know that that was a complete bubble, right? A lot of those companies obviously made it, but everything was overpriced, like toys.com. And, I think that's how Mark Cuban made a lot of his money, like, with some radio.com. But it's the only time it's over. And now it's, in COVID, it went considerably under 20%. But the point is this deficit and debt can't keep up, and Bitcoin solves this as an off ramp. Like, I feel like we're preaching to the choir here, but this is a great study by BlackRock. It just came out today. It's fresh off the press. Disco, thanks for finding it before the show. So we pivoted quickly, but this is exactly what we've been talking about, what everybody in this space knows, but just know now that investment advisors are going to be told this, and eventually the normies are going to be told to put, what was it, Disco, especially people of wealth, like dumbass, put 5% into Bitcoin, like 5%, like that's not even a dent for you. You're not even going to notice it. And just then, like you said, if it does rip and everything inverted and we do become more of a base layer zero Bitcoin society, those people who already had a couple $1 million put 5% in, they're going to be fine. They're going to they're probably going to win because they're still early. So great study.
Exactly. You know what's weird about it? This is a complete personal side note. Like
I like those.
It shows just how I have definite dyslexia in looking at this chart, because it's like I kind of like it because it's like in the opposite corners where the data really starts. So I don't know, it's just a weird vision for me, but it's just it's an interesting way that they put it together. And again, I give them, I don't want to give too much kudos, but I do give them kudos for presenting the information in a way that's pretty easy to digest.
Oh, so you like that being, because I think I was dyslexic too, but our generation never got diagnosed. We're both left-handed, which of course is the better hand. But I do like how this chart, because the deficit and the debt come down, hitting that zero mark. So I won't even be able to explain it properly, but you're right. Once you get a grasp of this chart, it hits home very well. So that's a good dyslexic point. I like it.
All right. As we move on then, yes. What do we want to go to? You can look at, we were talking, I like, it's an interesting image. And again, there's been some reports that have come out, and we've been looking at them in the past week, and it's part of a kind of greater narrative that we've been exploring, over the past months. And we're starting to see the ETH Bitcoin ratio hit some really low points. I think it's the lowest since 2021 right now. So you're starting to see that, and it's interesting, and it leads me to have just a ton of different questions, because when we started this show, I think the first show actually was 2 weeks or so from today, that much a year.
Okay.
So we're coming close. And at that point, if you go back and rewind the tape or look at that, it was everything I could do to try to get to have a validator, and everything I was thinking about was to, get as much ETH as I could, in the tank. And, fast forward, 12 months, and you're looking at this, and it just seems as if, it's kind of time to take a look at, did that thesis kind of change, and are we seeing that actual, the data points play that out? I know that when I got in, I was, watching and listening to like Bankless. That was kind of my onboarding to the space. And, I had some tokens that were all kind of tied into L2s, this or that. And, I parted with some of those yesterday as a result of it. I was like, dude, why am I holding on to hope from like, because, this one's really going to pump at some point. I can't give up on it. And I had some weird emotional attachments, and I had, a significant amount of different L2s in my bags. And, I'm definitely getting rid of them because I don't understand how it works really from a pricing perspective. Like, how does Ethereum benefit, or the L2s benefit? You see, crazy activity on base, but what does that mean? And then you're also seeing this data that you have pulled up on the validators. So what seems so crystal clear to me when we were starting this, now I've really kind of turned a page and looked at things from a different perspective.
Yeah, absolutely. Ethereum, I forgot how much, A, that it's almost been a year, but B, how much we talked about, because I think I had set my validators up last summer, early summer, and my last one was the end of summer, and I still have them running. And it seems like a lot of people are panicking. The data is there. The Ethereum main chain, the L1 chain, the number of validators has certainly gone up. We're at what are we at? It looks like we're at about 1,200,000 or something, looking at this chart. So there's a ton of validators, but the amount of activity on the Ethereum L1 base chain is not enough to, I guess that, what was it, Disco, the 7-day moving average of the validator rewards is down, and way down, and hasn't been this low since I think earlier in the year. Like it's a warning flag.
Yeah, it's a 6-month low for that, and, you've always said, a busy chain's a healthy chain and everything like that. So it's just hard to really understand, is the L2 strategy, going to work out, or is it just going to kind of devalue the kind of main chain? And it's an interesting development. We saw this week that Base just was hitting these numbers that nobody really expected in terms of their daily transactions. I think they had like 4.5 million transactions on last Saturday. So you're seeing that happen, and you're like, okay, so that is, good for Coinbase essentially, but how is that good for Ethereum, and how is it good for validators and stakers from that side of it? So it's kind of I don't know if it's an existential question. I don't need to make it that serious, but it's something definitely to kind of consider and think through. I want to, I'm probably going to knee jerk and make some stupid decisions. So I need to slow myself down and have a little 7-second delay and think it through. But definitely, you're seeing it happen.
7 seconds. But, I don't know. You say knee jerk, but you've also like, we do this show every week. We've been talking about it every week. It's not like, I still have the 3 validators. Both of us are in the same boat. When I sold my CryptoPunk, I did cash out immediately and I think I moved most of it to Bitcoin, and then I moved a little to Solana. And here's why. Like, let's look at the Crypto Slam charts here. Yeah. This is one of my favorite charts. So I always do, we do our show weekly. And this is the 7-day NFT sales volume by chain. And we always look at the big 3. So Ethereum had 33,000 buyers last week. Solana had 163,000 buyers. So that's about a 5X. And then Bitcoin had 14,000. So that's about a 10, 11X over Bitcoin or Solana's 10x over Bitcoin, and Ethereum's 2x over Bitcoin. So for all of us in the Bitcoin ordinal space, this is the space that I love. Bitcoin is pretty much, if there's something on chain ETH, maybe I'll get it, but Bitcoin and ordinals is where I'm going to collect my art. But I'm not in the majority here, Disco. 14,000 versus 33,000 on ETH and 163,000 on Solana. It just goes to show you, for, probably cheaper transactions, faster transactions, Solana's kicking everyone's butt. And like I said, I own Solana because I see the chain. I look at the data, but I would never store art on Solana. Like, oh, the chain's down, so my art it'll be back, right?
Promise.
I don't like that one, And we've talked about IPFS, like, Disco. I actually listened to one of our old shows in preparation for our show. We're going to do a Scribe next week to talk about fractal and runes and kind of compare all those. And I listened to the ordinals one, and I only got about halfway through. I'm going to finish it this week, but it's actually like, it's pretty good. Like, I figured our early shows would be kind of like, they suck. Like, I think my hair, I look like a complete like half hippie. It's like I haven't even gone full hippie. It's like I'm caught in that shitty hair in the middle. But the show was actually like really good, like using those PowerPoint things. So I'm excited to go with Scribe next week to talk about that even more. But again, we're in such a dead market. Especially you ordinals folks and runes folks, like you see stuff pumping on the timelines, like our numbers just aren't there. So, maybe like at some point, I'm sure there's so much coming out where people are holding out for the next market to move. But right now, like, even though Bitcoin is just crabbing sideways between 55 and 65 or whatever, like we're ordinals and runes right now. We're dead.
Yeah. And it's interesting just from there's people have been in the space, and we always talk about kind of the different classes of when you got in. Oh, they're early. Oh, they got, this at that or whatever it is. And it's kind of a, obviously it's a badge of honor to be early, and you've had that upside benefit to do that. But, if you're looking at Solana and it's crabbing around 120, 130 right now, and you look at the all-time high, which I think was like 260, like, that thing's going to surpass that most likely. And that really may be, when you're talking about cycling out of Ethereum a bit and obviously, being Bitcoin friendly on that side of it, but also including Solana in that, you do have the potential for that to really do have a nice run. And that may be something that, helps a lot of people create some wealth and kind of get a big win. So I think it's smart to look at it from that way. And yeah, I know I say knee jerk, but there's very little I do that's knee jerk with this, because I'm so like, I think about it so many different times. Like, it's a little weird. I'm like, well, what about this though? Who will, so it's wild.
Yeah, but we also learn from Ski God. It's like, and I'm guilty of this too. It's so easy to do something like, it's dead or whatever. But, and some things are so dead that they're not even sellable, like certain runes or ordinals or whatever. But it just goes to show you, like, what you and dude, like you and I probably aren't even remotely guilty as some of the people out there. Just like, I'm going to buy it. Like now I'm like, I can't believe, in a bear market now, I'm like, I'm not separating from my sats, because that should probably, unless we have OpCat or something huge, Bitcoin will be the first to rip, then ordinals or runes, probably runes, then maybe ordinals. But, runes without buying in blocks, like there's so much shit that has to be solved for those to be more mainstream and people to have a reason to go in. There's a couple runes I'm eyeing, but like, I'm in no rush. Like if I rush in to buy something right now, I'm competing against myself. I think capitulation, like, I don't think it's fully there yet. So I feel good, at least knowing this time, like I didn't miss out. Maybe I missed out on a little run somewhere, but like, I can't keep up with that stuff. But the more we like stay on top of our portfolio, make smart in and out investments, if we buy art, buy it for the long term, but if you're doing short-term trading, stay on top of it or don't bother, because you're not going to be buying the best low and selling the high unless you're really active.
Yeah. And I don't know where it came, but I had like this loyalty as opposed to repositioning. And I'm starting to, I guess, evolve a little bit more to understanding that, a reposition isn't a sign of failure necessarily. And, the bigger sign of failure is just, holding on to hope with something when it's like, dude, the signs are there. It's not happening right now. You can always find it. I mean, some of these L2s that I got rid of, like, I'm sure if I think that they're getting traction, there'll be nice entry points at times if I really find a renewed conviction in them. But just as a general kind of statement, it's just interesting to see, that ratio. Because I remember when I was, first getting in the space, there were people talking about the flippening and how inevitable it was that Ethereum was going to, surpass Bitcoin. And at this point, that doesn't seem as if that's the reality.
Yeah, the flippening is, I actually just went on to Ultrasound Money this morning, which is probably one of the greatest sites to look at ETH and just the activity, what's going on and who is burning the ETH and what transactions are happening. But there's a flippening chart on that homepage there. And yeah, like Disco said to start this whole segment, the Bitcoin to ETH ratio, ETH being on the failing side, has the lowest it's been since 2021. So, Bitcoin is the strongest currency. It's the most secure. It's the biggest network. And, a lot of Ethereans would even agree with that. But that one's definitely not looking good. So I guess to summarize this whole section, because there's so many things to say on it, like, you talk about Polygon and you talk about these different, L2s that you've invested in. I did too. I had to take tax loss harvesting last year, so I got rid of most of mine. But you're right, because I think one of the reasons we don't want to get rid of some of those is because we probably didn't put a ton in on those, but we also know that when altcoins and L2s on Ethereum rip, if Ethereum ever gets strong again, that those will probably rip a little harder. You know what I mean? So you don't want to miss out on your 5, 10, 20x, especially if you think long-term that those have a leg up. But I don't know, like a lot of these are still held by a multi-sig. A lot of these are still like, they're not even remotely decentralized yet. So the safest bet is definitely L1s, and let's be honest, it's Bitcoin. So,
and one of the gentlemen who has had the most conviction on that thesis backed it up again in. We're talking about like Saylor, the sale just continues to go that way. He acquired another 18,000 Bitcoin for 1.1 billion. And he's buying those. The price for that was, 60,000. So you look at someone who still has a conviction at this price, like that's the biggest sign to me that it's like, that's your main strategy. And they're not sitting there waiting for these, potential dip in events like we were talking about. They're buying at market rate, even though it's at the higher end of the market compared to, the last year or whatever it is. So I just think that's pretty fascinating.
Yeah, absolutely. Absolutely. I tried to click on the picture and then I got this whole crazy SEC filing. But yeah, 18,300 Bitcoin. I mean, they're adding another billion in Bitcoin. Like at some point, it's just going to be harder and harder for other companies to catch up. It's just amazing that this company, it was an S&P 500 company, I believe, on the lower side of that 500, but they just keep buying Bitcoin and they're outperforming everybody. If you haven't seen it yet, I highly recommend everyone out there to look at, he just did it was like a 25, 30-minute presentation on Bitcoin as a base for corporations and stuff and adoption and what's happening and how the accounting rules finally, they already passed it, but in 2025, January 1st, next year, the accounting rules will change and it's going to be even easier to hold Bitcoin as a treasury. So it's just, I don't know. Like, I feel like until we're blue in the face, it's just like if I had a bigger company, if I was Apple or one of these huge companies, I'd put at least 2, 3, 4, or 5% in there. They have nothing to lose and everything to gain, because once a big blue chip company like Google or Apple or Microsoft or whoever does this, like everybody is going to line up to do it. And if you're first, you're going to see like 100x without even blinking an eye, and just the further out in the curve you are, the you'll still see benefits, but just less. So,
yeah. All right. I think we got to talk about, the Donald Trump situation. First of all, again, it's just so odd to me. And I know I keep saying this, and I don't know if it resonates with anyone else, but with the news cycles as they are, like, I don't even feel like we're hearing enough about the assassination attempt, again.
Right.
We're seeing another one. We've been, saying, like, just crazy things can happen leading up to this election, next 50 something days. And, over the weekend, another attempt was uncovered. So thankfully that was foiled. And, we're certainly happy to hear that. But what was crazy was he had that attempt happen on a golf course by Mar-a-Lago on Sunday, and then Monday night he was live, doing a crypto spaces, and it's just talk about just a resilience to just whatever strength of character that must represent, or whatever it is. Like I've been near trauma and gun related trauma, and I couldn't imagine just shaking it off and just going about your day and moving forward. And so he was on with Farouk, and my thoughts on it really quickly, just to kind of talk about it a bit, was I'm not going to get that into the World Liberty Financial. I think that I wouldn't be too, bullish on that being a resounding success moving forward. But I thought what was really interesting out of the whole conversation was when they got into actually talking about how, Trump kind of got turned on to the space and crypto and everything like that. Like, I thought he had some really eloquent answers. And I think that he does have a good sense of, what's possible with it. And he might be one of those people who has one of the biggest cases of FOMO in, like he's probably, like, if you had a FOMO, factor, I think that he would be quite high on that. And I think that he understands that this is something that we as a country don't want to, miss out on. So it was interesting how he was pretty articulate in that he was talking about, he started seeing contributions come in with crypto. He started seeing, kind of the immediacy of being able to do an NFT collection. And, so being open to that and kind of exploring it got him to really want to take a deeper look at it, and then ultimately look at it as a differentiator and something that, if our country gets behind it and can be a leader in it, that would be very beneficial moving forward. He also did understand the generational aspect of it. And I thought he made a really good analogy when he was talking about how he had, like, Chi or someone was visiting, and his, like, 10-year-old grandkids were able to speak in Mandarin. And he's like, when you're older, you can't necessarily digest a whole new language. And that's kind of what crypto can be to the older folks. So it, not necessarily relying on the old guard to understand it, but understanding that it's very passionate, and a lot of young people really believe in it and are putting their support behind it. Being open to that was kind of an eye-opening take that I didn't necessarily expect from the forum with which I saw it.
So would you go as far, because I did not watch it, I was out that night, would you go so far as to say that Trump is pro Bitcoin and is not just using this for a whole single voter block of crypto voters?
I drank the Kool-Aid. So however it was presented from that side of it, I thought that he would be pro developing it and putting resources and making it more accessible for the country to be at the forefront and to be a leader in it. I think that he sees that it will be a fundamental, he referred to it as like a fledgling industry a few times. He's like, it's so small right now, but people are really passionate and really smart about it, So, and again, I'm paraphrasing, I'm not doing direct quotes or anything, but it was kind of that take on it where I was like, that seemed really genuine in terms of that. And we've had that kind of question or thought, like, is it just, it's single issue voter and, polls say this or that. But to me, it came across like he was genuinely, excited about the prospect of even learning more about it and seeing how it can be used to counter some of the problems that, we've all seen. Look back at that BlackRock deck we went through, like, there are issues that have been glossed over for years and years and years that at some point will ultimately come to a head. And for us to be able to kind of diversify our strategies as a country, that's kind of the take I got.
Yeah. So, in his first term, he was definitely anti-Bitcoin, but it sounds like that was more the people parroting around him. Clearly, Barron, his youngest son, and Eric, who I believe is the youngest son from whatever, from that, the main marriage, we'll call it. Yeah. Ivanka, or Ivana. So those two are kind of the leaders in this Liberty coin. You said smartly Trump left the room when they were talking about that because he doesn't want to be like, this is huge, because that one sounds like it's very far out on the risk spectrum. And the Liberty coin is on ETH, right?
Yeah, it's on ETH, and I guess it's kind of like a fork of a Aave fork. Like it was something that was out there before called like Doe. So it's definitely ETH, and that that is it's not just Bitcoin. So I don't know, if the true Bitcoiners are going to be as excited about him being associated with something on a different chain and all that. So it'll be interesting.
Well, they definitely won't be. They 100% won't be. But I mean, and that's okay. I mean, I think a multi-chain world personally is good because if a government co-ops a certain blockchain, then you've got others. You can obviously hard fork the same blockchain, like obviously with Bitcoin, we would do that, but that has to be a very coordinated effort. So having multiple chains probably makes decentralization, gives us a better shot, and to have different technologies under the hood and stuff. So, well, that sounds promising. It sounds like you're saying like he spoke to it eloquently, and it wasn't just talking points that crypto folks would want to hear. It felt a little more nuanced, and it sounds like you're saying sometimes, like with his debate with Kamala, where he gets very in like type A, more aggressive mode, especially with like the immigration and the border wall. This was more of a conversation, and he sounded like he's trying to learn it and fairly eloquent.
Yeah. And I'm, one of the things we always talk about is trying to look at everything as critically as you can. Right. So I went into it with my own bias, whatever it would be. And I was like, okay, dude, don't carry your bias in and listen. And I was like, it sounded personal. It sounded as if there was an evolution and an understanding about the potential. So that, I was pretty impressed with how that came about, or how that came off at least.
Yeah, interesting. So, all right. Well, thanks for sharing that. And thanks for listening to that. So, our fourth and final topic before we bring on a very special guest is, no, that's not the right one. Where is it? Did I miss it? Where's the flying fish? Yeah, I'll find it. Why don't you start talking? I'll find the flying fish.
Well, I just think it's an interesting story. This week, a restaurant, sushi restaurant in New York is supposed to open, and on September 20th, and it's called Flyfish. And it started with an NFT raise, like an NFT drop, which, was the utility of the NFT holders was to be able to have access to an exclusive club.
Right.
Sounds like, a big part of the kind of last run of, kind of utility conversations and the development of NFTs and, how that all came about. So it's interesting that the SEC made them pay a penalty of $750,000 this week, and to destroy all of the NFTs that they actually still held. So they had a enforcement notice come to them from, the SEC and everything. But the part of the story that just has me just super charged up, and it's just so odd to me that at this point in my life, like, I'm going to have to start reading more of the correspondences from, for sure, Hester Pierce, because her and Mark Oida, I don't know how to pronounce the name necessarily, so I apologize, just wrote this policy letter. Their dissent on it was just, it's wizardry. Like, it is so well articulated and fascinating just how smartly put together the dissent is. They talk about, in the beginning, it says, for curmudgeonly commissioners like us, crypto enforcement feels a bit like a trip to a restaurant for a meal, omakase style. Omakase translates to, quote, I'll leave it to you. The directive is wonderful in the hands of a renowned chef, but disastrous in the hands of a crypto-obsessed commission. So just the wordsmithing of all this is
Yeah.
really freaking great. And just another one, today's settlement enforcement action with Flyfish Club for its sale of non-fungible tokens is just the latest dish that undermines trust in a chef SEC. So it's just, I just love that they're like articulate in their dissent and really going against, the chairman and what they're doing on this. So I'm very happy to see that there really are some people thinking, along the lines of what we're saying and understanding. They're like, it can't be a security because it has utility, and they understand all the nuance of these arguments. So to me, it's another reflection of just the proliferation of the talking points in conversations that we've been having, and seeing it come from different voices, whether it be Donald Trump, whether it be Larry Fink, whether it be Hester Pierce. It's just starting to be really fun to see people come out and be articulate in terms of kind of supporting what we're so passionate about.
Yeah, absolutely. And like, what if this Flyfish Club, which they raised what, 15 million on these NFTs, and Gary Vaynerchuk was involved, and it's like an upscale New York Upper East Side restaurant, and
Correct.
you were going to have certain benefits to this eating club, whether it was discounts or whether it's like velvet rope or kind of like an exclusive little club. Like, who's to say who can and can't do that? But you could have done that. Like, if you had done it with normal, like a reward card, or what am I trying to say? Like a frequent flyer, whatever they're called.
Yes.
Like it would be fine. But the fact that it was NFTs, the SEC goes after them. And like, this probably isn't a restaurant that I would pay a ton to do extra to, but the fact of these NFTs and clubs, we talked about with Stephen Miller, these artist clubs, like, this is definitely going to be a part of the future, whether it's travel clubs or art clubs, or, I know D-Gods, I'm not a fan, but it's got a tight community, and they're all bros and they all party together, but these different NFTs form these clubs, and, who's to say who can and can't do it? And I wish I remember the number, but remember, Disco, we took that class with 6529, and we actually learned that you can make under a certain amount of money. I thought it was like 10 or 15 million, maybe it was even 30 million, that you can collect before you have to like be a security, or you have to like claim it in a certain regulatory way. And they were very, like, that test was super hard, and I was really proud of finishing that and getting a decent score on it. I know we both did, but that was the thing they were like, hey, like, that's the thing they wanted to drive home. I'm like, hey, I actually got something out of this. It was pretty cool.
Yeah, so I got a couple more quick things to dovetail on that. So from the actual the dissent letter, I love this quote too. NFTs offer a promising way to allow creative people such as chefs, musicians, or visual artists to monetize their talent in a potentially efficient way for selling access to experiences and communities. Creative people should be able to experiment with NFTs without having to consult a high-priced tea leaf reader, lawyer. So it's just, I just love that these arguments are being made. And really quickly, there was another letter. As I said, I got kind of interested in these letters, but there was a letter to the Honorable Gary Gensler this week that came from Tom Emmert and Patrick McHenry, and it addressed exactly what you said. It was about airdrops. And they said, one of the lines that really struck me was, companies routinely offer rewards to customers through intangible representations of value, such as airline miles or credit card points, without implicating the Howey test. These rewards are distributed freely to encourage engagement, just as airdrops aim to engage users and developers in the blockchain's network's growth and decentralize. How does the SEC distinguish between these rewards given away for free and digital assets airdrop to an individual? So I'm happy that these questions are being asked in a very articulate and direct way, because it's exactly what you were saying. Like, okay, so Amex can give me points for doing this. How is that any different? And it's just like, so just stop picking on an industry that you don't understand, because these practices are being applied across all businesses.
Yeah, that's a really good point. And I appreciate you digging into these letters, because nuance matters. And being articulate matters. And I'll be curious to see, there's some talk of possibly a lame duck Congress, like, people who aren't going to get voted back in. They're like, I'm into crypto. Screw it. Let's pass something. Like, let's reach across the aisle. So that will be, it might be wishful thinking. We'll see, but that would be great if they could like lock something in and then, you go lame duck in the next Congress. At least we've passed some good things on crypto, at least to get us started. But who knows? It's wishful thinking, but I know that was all kind of tied into that.
Yeah. So again, kind of just to wrap the whole week up to a degree, is I was excited to see the articulation and the kind of absorption of some of the things that we've been very, excited to share with people, see it kind of manifest in concrete ways and in concrete communications from positions of authority within the system. So I found that an interesting kind of nugget for the week.
Yeah, absolutely. Absolutely. I know we've covered the big four for this week. Is there anything else you wanted to share before we bring on kind of our special guests and wrap up this part of the show?
Yeah, no, I feel like it's a great show. We got that. Oh, we could probably see what the announcement was.
Okay.
Oh, I just said supersized rate cut is the headline I'm seeing. They did a 0.5 point.
All right. So there you have it. A 1/2 point has been the cut.
Disregard what I said about an hour earlier when I was pretty sure it was going to be a 1/4 point.
Well, I think it was going to be a half, and then it went, and then they trial ballooned a 1/4. But for some reason, maybe they see the economy as worse as it is. So I expect to see stuff ripping. Let's see if anything short term. So Bitcoin's up to 60,000 right now. Let's see the stock market. Yeah, so the stock market kind of priced it in. It's up 0.5% across the board. So it sounds like there was a hedge, and there was almost like people are like, well, I'll split the difference. It's going to be one of the two. But at the end of the day, this is Bitcoin, and who gives a shit, because what the Fed does not affect the 21 million supply. So with that said, we cannot wait to speak with our special guest. Why don't you take us out, Disco? I'll do the closing, and then we're going to bring Gerard up from Vivid. And I'm so excited to have this conversation and share with him.
Yeah, it's an exciting day. So again, everything that we do for the show is for entertainment purposes only. Please don't construe anything to be financial advice. Do your own research. Make sure you protect yourself and you don't put in more than you can afford to lose. And have fun out there, and enjoy the journey and the adventure.
Absolutely. Take care, everybody, and stay tuned for us meeting with Vivid and Gerard in a huge drop today that you will all be bidding on. So stay tuned.